In this video, I'm going to talk about quit moving your stop too soon. Stay tuned. Hey traders, a very warm welcome to you. Okay, so quit moving your stop too soon. What do I mean by that, and why should we quit doing it? Okay, so we have a trade here, we've got a chart here, we've gone long, we're all very, very happy with whatever the entry is. We're long and the market has pushed up in our direction. Our initial stop was, let's say 50 pips. Let's say we're trading a USD JPY and we've got a 50 pip initial stop, right? Whatever we're doing, we're swing trading it, we're looking for 300 pips, 3-4 day move, whatever it may be. Doesn't really matter. It could be a day trade, could be a swing trade, but let's use that for an argument's sake now. You're in the trade, you use the 50 pip stop and the market starts to go in your direction. You see the money on the table, you see a few $100s, you see a few $1,000s, whatever level you're playing at, you see 10, 20. Again, that doesn't matter either. It starts to go in your direction, and what do? You maybe have, hopefully, you have some kind of target up here. Let's get a red pen out so we can distinguish a little bit what's going on. Hopefully, you have some kind of profit target for it, whether that's finite based on the number of pips, or whether that's a previous level of resistance, or whether that's you've extrapolated some kind of fib extension, whatever it may be. We're not going to talk about operational things here, but just you've hopefully got some kind of target. Now, the price starts to go in your direction. Your stop is, so let's say down here, it's under the actual chart axis, but hey, it's down there, it goes in your direction. You've got some in the bag. We're not talking about the initial kind of move where you get 10 pips or whatever. Most people don't really tighten up for that. But if you're looking for that 300 pip move, when you start getting 50, 60 pips in the bag, a lot of people then start ratcheting up that stop. They start pulling it up. They start to say, I don't really want to lose. See that as 50 pips go. I'm going to pull it to break even. That's another classic one. So they bring it to this break even level and tighten the stop right up because they don't want to lose the 50 pips. Now, why should we not? I'm not specifically talking about break even here, but a lot of people use that as their first kind of get it to there quickly. And I'm not necessarily against pulling it to break even. I know a lot of people are, and I understand that, but psychologically, I understand why people do it. I don't think it's the best behavior to do, but I understand why people do that. But the thing I'm talking about here is putting your stop up too early. A lot of people want to lock in, as they say, their profit. And what you're doing with that is you're not giving the market chance to, you're giving it room to breathe is really the word I'm looking for. You're not giving it the opportunity to oscillate, or the chance to oscillate and then continue in your direction. You're not allowing for the noise of the market. And yes, every now and then you're going to get a lovely little trade that you can tighten your stop. No matter how much you tighten your stop up, the thing's just going to rocket up, take your target, and you're going to be very, very happy. But you and I both know, guys, that in the real world, markets do this. They give you a little bit, they come down, they sort of look like they're going to break down lower. Then they push back up a little bit, they consolidate a bit, they push to high. You know, this is real world market conditions. We don't get, occasionally we do, we don't get very often that extreme move that goes from entry to exit. Thank you very much, 300 pips, I'll take my 3K and run. No, it doesn't happen. You get more like this kind of stuff where it puts you in doubt. If you're watching it, you're thinking, oh, that doesn't look very good. We've pulled back here, I'm in. Oh, I've given back kind of 30 pips on my trade. Now it's pushing up, or 100 pips if I'm swing trading. Now it's pushing up. That's the real world, isn't it? As we all know. So how do you kind of move your stop? Well, the first thing to do is don't move it too soon. You know, give it room, accept that you might have to give back some profit. If you want to go for those 3-to-1s, 4-to-1s, 10-to-1 risk reward ratio trades, you need to give it room. And so moving it up too much too soon is gonna not allow you to have that. You know, very often, how many times have you seen this come down and almost test your entry before pushing back off again? You know, and the point is, if you'd already bought here, why do you want to come out again here? Perhaps you do because of the chart pattern, but most of the time you wouldn't, because you've bought at a support level or whatever it may be, and now it's at there again. It's just, and if it holds, you want to buy it. But because you're in a trade, you've actually flipped the way you're going to trade that, and you're actually selling it here because it's your stop. And you wouldn't. Would you normally sell it here if you didn't have a position on? No, you wouldn't. You'd no way you'd sell it there. Perhaps you would sell it if it broke under and kind of held at lows, but would you sell into this? Probably not. So you've got to think of it like that as well, and think of it not just as stop in terms of protecting profits, but really think of it in terms of, I'm selling this market here. In the case of a long, of course, I'm selling this market. So if it comes back, to my level, I'm selling it. Would I want to go short here? Probably not. Then why would I want to close my position out? Only reason I'm doing it is because I want to protect my capital, which is not really the way to do it. Now, don't get me wrong, I'm in favour of protecting capital. I'm in favour of kind of not giving stuff back. But I think, myself included in this, is something that I have done many years ago. I was very aggressive with tightening my stop. And yes, you know, you're making money, but then you kind of analyse it and you say, hey, you know what, if I actually just give myself a little bit more room, then I could be making many multiples of what I am making. I'm being far too concerned that I'm going to give it back. And actually, in the kind of 1 out of 5 times you do give it back, it doesn't matter because the other times make up for it. We're not talking about trades that just go against you straight away and get stopped out. They're going to happen. But it's bringing that stop up. Okay, so what's the solution? Let's get on to the solution or some suggested solutions. Again, comments in the comment section below how you kind of use this trailing stop methodology. You know, one way to do it is to have a kind of noise number, if you like. So the ATR of your 15-minute chart, your daily chart, and just drag your stop up behind that. And there are some indicators that you can download for that as well. You know, whichever charting package you're using, like a volatility-based stop, and it will plot, you know, a kind of dot as it goes up. And so it will always give a little bit of an envelope, and you could use that. And that stops you from trading it too quickly. And that's based purely on the volatility of the market, hopefully allowing for that noise. Another way you could do it is you could say, right, do you know what? When we find, when a chart pattern comes in and kind of gives me some support here, then breaks out, I'm going to then pull my trade under here. I'm going to look at it as a new trade each time. So in other words, rather than just trailing the stop up, I'm going to assume that I have no trade and then say, would I want to be in this trade? Yes, I would. Okay, where would I put my stop if this was a fresh trade for me? Oh, yes, I'm buying this flag breakout, for example, here. I'd have my stop there. Okay, bring your stop right up. And this comes again, if you're pyramiding into positions, this is kind of what you do as well. So that's another way of doing it. Or the final way of doing it is literally to, if you really struggle with stop loss stuff, is to have scale out points of your position. Keep your initial stop in, but just scale out of the position. So sell some, sell some, sell some, sell some. I'm not saying this is definitely the right way to do it. I'm just giving you ideas on how to approach it. And just one thing, guys, digressing slightly, is people are going to tell you this is the right way to do it, it's the wrong way to do it. And you might look at something on paper and it looks pretty like foolish behavior. You think, well, that mathematically isn't right, logically that's not right. But don't forget, we've got to sometimes appease the psychological demons in our mind in trading. Sometimes you've got to feed the beast, so to speak, and take profits when you shouldn't take profits. Put some, you know, in the bank just to feed that psychological need that you've got. Yes, it might be inferior behavior, and you might say, well, actually I should be holding it all the way to the very end because that's what I've analyzed. Yes, logically I get it, but you know, we're human beings. We sometimes have to give, you know, do something that's not quite right, not quite perfect to get the bigger result that we want. So don't be afraid of doing that kind of stuff. Okay, guys, so that's pretty much what I've got for you. Don't move the stop too close. If it's going your direction, you know, consider this is the most vulnerable part. Finally, guys, this part here is the most vulnerable part. I think most people, when they're up here, you tighten it up. Okay, it's probably another video to talk about when we're getting close to our target, where do we put our stop? But if you're using a volatility-based stop, you're okay. This bit is the most dangerous. You know, it's the takeoff, if you like, of the trade. You're in the trade, you've got your fixed stop below from your entry. It starts to go in your direction. And being careful that you're not too aggressive with tightening that up in the first stages of the trade will help you out. Yes, you're going to give some back. It's going to happen. Yes, you're going to lose 50. In fact, you might lose, you know, your full 100 pips. In that example, it goes up 50, comes back, takes you out. It's going to happen from time to time. If you struggle with this and kind of say, well, actually, I need to get it to plus 100 pips before I even touch my stop. Those are the kind of rules you should be saying. But another sort of flavor on that is to say, okay, you know what? Let me bring half of my stop up. If you do struggle and you find yourself really drawn to pulling it to break even or to you're locking in a bit more, then just bring half up, bring a quarter up, just do something to, like I say, feed that need. And so you can prove to yourself, well, actually, I'm getting stopped on that, but my main portion, my 75% of my trade isn't getting stopped. Look at that. I've done that for 10 trades in a row now, 20, 30, 40 trades in a row. My 75%, this is working for me. I won't need to feed that. I won't need to bring half of my stop up. I won't need to bring up a quarter of my position stop because I've proved to myself that actually those are the right conditions. And finally, you know, obviously we've got to be in the right conditions, guys. If you're trading looking for a target there, and the market has been, this is getting a bit messy now, isn't it? But you get the point. The market's been doing this and you're looking for that target. You're trying to force your will onto the market conditions that aren't there. So that's worth bearing in mind as well. Anyway, guys, quit moving your stop too soon. Have a think about that. I don't think there's a definite answer one way or the other, but comments in the comment section below. Let me know your thoughts and your ideas and strategies yourself for doing that. Is it something you have a problem with? Is it something that doesn't bother you? You know, have you got a method that we haven't talked about here that you'd like to share with everybody else out there? If you like this video, give it a thumbs up. If you haven't subscribed yet, consider doing so for more videos from me and other traders on this channel. Good trading, take care, keep the risk managed, and I'll see you in the next one. Goodbye.